Drawing trend lines in the market can sometimes be a super complicated task. This is because of the subjectivity that comes with deciding which highs or lows to connect, how steep your line should be, and even what time frame to draw your trend lines on. Because of the many variables that need to be accounted for, you may end up drawing so many lines that your chart starts looking like art created by a toddler. This confusion and lack of clarity can lead to slow and poor decision making when trading. To avoid this, we're going to use a more systematic, objective method, a unique indicator that takes the guesswork out of your trading strategy. It provides clarity, simplicity, and more importantly, an unbiased perspective of market trends. In no way am I saying that using an indicator is the perfect way to do it, because most of the time, indicators lag a lot. However, when used wisely and understood properly, indicators can offer a less cluttered, more streamlined approach to identifying trends in the market. Now, this indicator is called HA Market Bias. Let's add it to our chart. Open the indicator search box and type in Market Bias. Select this one by Professor X. I've used the market bias indicator in a lot of my strategies before, but I've never really had a chance to review it individually. I think this indicator will be a great addition to your trading arsenal. At its very core, this indicator uses smooth Heiken Ashi candles to determine the market's overall trend direction. Heiken Ashi means average bar in Japanese, and that is exactly what this indicator is doing. It's finding the average price in the candlesticks. This dotted line in the center, this one right here, is just a series of Heiken Ashi candles smoothed over a period of time. Then for better visuals, these Heiken Ashi candles can also be plotted as a color-changing background like this. Now, since this color-changing background ribbon is just mirroring the Heiken Ashi candles, we can actually turn off the candles to have a better representation of market trends. And while we're in the settings, let's access the Inputs tab and customize it to fit our strategy. We're going to change the indicator period to 150 and the smoothing to 40. Now, in a bullish trend, for example here, instead of wondering whether to draw your trend line like this, or like this, or like this, you just activate your indicator and voila. When the indicator is colored bright green like here, this indicates a strong bullish trend. But whenever it's colored dark green like here, this indicates a weak bullish trend and can also be interpreted as the market doing a pullback. Because of this, we're going to use this indicator to not only identify trends in the market, but also to identify areas of pullbacks that can actually be used to enter long and short trades. In a bearish trend, a bright red color indicates a strong trend, while a dark red color indicates a weak trend or a pullback. And of course, just like in a bullish trend, these pullbacks represent areas of potential trade entries. Now, looking at these trades, they're really good, but how do you decide exactly when to enter your trade? This is where a buy-sell indicator would really help. For this video, we're gonna go with one that's called QQE Signals, this one by Colin MCK. The QQE Signals is a buy-sell indicator derived from another indicator known as the QQE, which stands for Quantitative Qualitative Estimation. This is the original indicator compared to the Signals one. Now, looking at this, you can see that every time the green line crosses above the red line on the original QQE, a long signal is printed on the QQE Signals indicator. And every time the green line crosses below the red line on the original QQE, a short signal is printed on the QQE Signals indicator. This essentially means that we don't need to actually use the original QQE, so let's just delete it. Now, the way these two indicators are going to complement each other is that every time there is a pullback identified by the market bias, we're going to enter a long trade as soon as there is a long signal printed by the QQE Signals indicator. And of course, it's going to be the opposite for a short trade. Now, this strategy is good for now, but in order to make it so much better, we're gonna need this next indicator. But before we add it to our chart, if you're looking for an exchange to trade crypto, then check out Pionex. Not only can you trade manually on Pionex, but you can also take advantage of over 15 different crypto trading bots, which you can set up to automatically trade for you 24/7. If you don't want to use the existing trading bots, you can even set up your own trading strategy in PineScript using their own AI chatbot called pionexgpt. If that's not enough, you can also explore their GPT marketplace to see the profitable strategies that people have created using PineXgpt. So as you can see, there is something for everyone on Pionex. Once you find here the strategy you're interested in, you can simply click here and then here to copy its trades. And one more thing, if you sign up using the link in the video description, you'll get access to a 20% discount on all your crypto trading fees. Now, back to the video. Open the indicator search box and type in Hawkeye volume and select this one by this guy. Double click on the indicator and on the inputs tab, change the divisor to 1. Then on the style tab, disable these plot options and then click OK. Now, this indicator is a volume indicator and we're going to be using it as a final confirmation before entering any trades. When these bars are colored gray, that indicates that the market doesn't have sufficient volume and we will not take any trades. When they're colored green, that indicates the presence of enough bullish volume in the market for us to take long trades. The red color is for bearish volume and it's going to be a confirmation for taking short trades. Now, to trade using this strategy, here's how we're going to do it. For a long trade, first, the market should be in a bullish trend. We're going to confirm this not by drawing a trend line, but by making sure that the price is trading above the trend ribbon of the market bias indicator, and the ribbon should also be colored bright or dark green. Second, the market should do a pullback. This is going to be confirmed when the trend ribbon of the market bias indicator changes color from bright green to dark green. Third, during the pullback, we want the very next signal on the QQE indicator to be a long signal. For this long signal to be valid, none of these candles during the pullback should touch this trend ribbon. So from here to here, all these candles should be above this ribbon. Lastly, we want to confirm that there is enough bullish volume in the market to push the price all the way to take profit. To do that, you just make sure that this last bar of the Hawkeye volume indicator is colored green. All our entry conditions are met on this candle, so we're going to enter a long trade. The stop loss is going to be set below the most recent swing low. For the take profit, we're going to set it at 2 times the risk. We let the trade run and take profit. For short trades, we're just going to reverse all the conditions. First, the market should be in a bearish trend. We're going to confirm this by making sure that the price is trading below the trend ribbon of the market bias indicator and the ribbon should be colored bright or dark red. Second, the market should do a pullback. This is going to be confirmed when the trend ribbon changes color from bright red to dark red. Third, during the pullback, we want the very next signal on the QQE indicator to be a short signal. For this short signal to be valid, none of these candles during the pullback should touch this trend ribbon. So from here to here, all these candles should be below this ribbon. Last but not least, we want to confirm that there is enough bearish volume in the market to push the price all the way to take profit. To do that, you just make sure that this last bar of the Hawkeye volume indicator is colored red. All our entry conditions are met on this candle, so we're going to enter a short trade. The stop loss is going to be set above the most recent swing high. For the take profit, we're going to set it at 2 times the risk. We let the trade run and take profit. This is just one of the many strategies that you can do using the market bias indicator. On top of this, you can even try adding things like price action, smart money concepts, or even support and resistance to make the strategy so much better. That's been it for this video. I hope you found some value. If you did, please hit the like button below and consider subscribing to stay tuned. Thanks for watching. See you next time.